following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rocking tune means it's time once again for the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as the old Options Insider Radio Network. And joining me on the old all-star panel, we have a great group for you today, listeners. Starting off, we're going to mix it up today. We actually have a newcomer. He's been on the show before, but it's been quite a while. So we'll start off with him, give him some pride of place. He is none other than Joe Cusack, the Senior Vice President of Education over there at Options Express. If you've been to an OX webinar or an educational event, chances are you've bumped into this fellow. So Joe, welcome back to the program. It has been too long.
Hey, Mark, thank you. I appreciate it.
Doing the tough work of holding down the OX hot seat today.
I am up for the challenge, and I look forward to it.
All right. Also joining us.
Yeah, comment, Joe, how much I love your beautiful Chicago accent. It just, it's like music to my ears.
Oh,
it really is. It's like listening to a Mozart symphony. But if that symphony ate a lot of sausage links.
I was just going to say, it has to involve Polish sausage in some way.
He's from Milwaukee. Where do you get Chicago?
Are you really?
Yeah. Wow.
Wow.
You guys got into this we were only into it in 30 seconds. This is amazing. But yeah, I was born here originally from Milwaukee. So I got a lot of mix, but all Midwest, my friend.
Milwaukee's a Chicago suburb, right?
It really it's a small Chicago suburb, but
to paraphrase Homer Simpson,
why should there? And I've heard you call it a traffic light instead of a, you know what they call a traffic light in Wisconsin, Mark Longo?
A stop sign?
A stop and go light. They go, oh yeah, you go about 4 stop and go lights past the Shopko, and then you'll see the BP there. You can get yourself a Mountain Dew. It'll be delicious.
See, Joe, in your honor, even before we started the show, we've already completely derailed it. So there you go. Listeners, in case you couldn't tell, that tinny voice, which has a bit of Chicago to it as well, is none other than Mark Sebastian from OptionPit.com. I'd welcome you to the show, sir, but you've already done so.
Yeah, thank you. I'm glad to have thrown this thing off the rails right away. I haven't been on in a while. I needed to make sure I was on the top of my game. I'm like an all-star coming back from an injury.
Yeah, Andrew's been usurping your space here on the show.
Yeah, well, I had my delt blow up, so I've been kind of tied up getting that fixed. The funny thing is, Mark, I was using as a replacement, I had an HP with Windows XP from 2007, and it was something I used to trade on. It could run Acton. And the funny thing is, it could still handle all the workload that I was doing. That's It was pretty impressive, actually. Much better than like my laptop. I was actually surprised. My laptop from 2011 was being outperformed by my desktop from 2007.
I think instead of getting a Dell, you got a Lemon, sir. You might want to send some of those back.
I did.
And you haven't even jumped.
But the Dell dude came over and said, "Dude, you're getting a fixed Dell."
And you haven't even jumped into the Windows 8 phrase. You can't even blame that. It's just your old Dell conking out. Speaking of conking out, we are also joined by the man from the land of no technology, a.k.a. the Amish of Illinois, none other than St. Charles, Illinois. And he's good old Uncle Mike Tosaw. Uncle Mike, welcome back to the show. You must love that intro.
Hey, we got running water here. We're getting it done. I have a signal beaming in from about 10 miles into the city because, as you Chicago people believe, there is no running water or electricity out here. So I'm doing my best.
Hey, you got a one-up on me today. They shut down the water in our office building today to do some work here. So as I'm recording, there is no running water here either. So there you go. I can empathize with you right now.
There you go.
All I need is an outhouse, and we're all set, ready to go.
Mm-hmm.
All right, and before we derail the show any further, if that's even possible, we're going to dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we break down what was trading. It was an interesting day on the street today. Had a little bit of mixed stuff early in the morning, but by the end of the day, the rally was in full effect. Most of the major indices closing up fractionally on the day, up about 0.3% on the S&P and the Dow. NASDAQ, no surprise, as we've seen of late, leading the charge, up about 0.5% to close 29.89, just shy of that 29.90 level. Of course, a lot of the love coming that way via this fruit company that Uncle Mike seems to never be able to stop talking about. Of course, getting a lot of love of late to the downside mostly, but today got a bit of a reversal, and towards the end of the day, that rally extended. When I checked it
I think stocks are the only thing where you don't want love to the downside.
Yeah, you don't really not too much love for the downside love from a stock perspective. But Apple, of course, it was relatively soft towards the end of the day when I was watching it. Then in latter part of the session, that closing hour, it doubled its gains, closing up near about $8.50 or 1.5% on the day to $5.47. All of this as a result, it appears, of that oft-cited rumor that's coming back again in full force today of the old Apple TV. Apparently, Tim Cook making some statements that make that seem like it might be a little bit less of a vaporware than it has been in months and years past. Uncle Mike, I know this has been a big holding of yours, not a holding, but a big attention getter for you lately, even though you're not in it anymore. You're thinking about getting back in. So what do you make of today's action out in Apple?
Puts have been shorted. I don't have the position quite set up the way that I want to yet for all my clients, so I'm not able to really comment on it. But on this pullback, I have started to get back into Apple.
Wow, so it's official. The game is once again afoot.
Well, it's not official yet. It's really the I don't have near the deltas that I had on it on the rally up, but definitely starting to get back into it.
Yeah, and Mike, I'll tell you, those puts are super juicy. You know, Apple 30-day vol is right around 43%. Don't mind if I do. That's
pretty much what I said.
That's a nice little sale. You know, I'm looking at a 2-year historical. There's been about a net total of 6 days. Now, let me see. Over the last 2 years, Apple has traded at a higher vol than it closed today on a grand total of about 10 days. So, you know, I think that if you were looking to get in, you know, there was an opportunity yesterday or even like on the open when we opened up down 20, you know, Apple opened up 525. That was an excellent opportunity to jump in and sell primo or even go long calls at that point. But since I think you have to look at some sort of bullish put spread or a bull put spread, as is sometimes described by Mike Tosaw.
You got to say it right.
Yeah, bull put spread.
That's right.
And so I'll be honest, Mike. If you like Apple, I think selling puts was the absolute 100% way to go. Nice work.
Well, thank you, sir. That's a historic moment. It's the first time I've ever been complimented for doing anything bullish on Apple in the 2.5-year history of this show.
I think there's been some backhanded compliments in there along the way. Nothing perhaps too overt, but a few backhanded compliments. You can't argue with the results. It has worked out fairly well, regardless of the intent behind it. But Joe, obviously, as the educational major domo over there at OX, I'd imagine a lot of your day is taken up with talking about Apple in various capacities, writing calls, buying puts, etc. That's what people seem to want to hear about these days. If you're doing a webinar, you're doing an educational event. So what do you make of today's action, and what have you been telling all of your various students and clients over at OX over the past few months, given all the vacillations we've seen in Apple lately?
Well, when it got into that upper vapor zone of the high sixes, that 700 level, that pullback right around 640, that's where you saw the institutions come in. And basically, the writing was on the wall. It's been running, as Mark brought up, a very, very, very important point about Apple. It's been running around a 40 vol in that front month. It did pull back, never saw it get below 30, even when it was starting to rally up, trying to test after that real deep pullback a couple months ago. So, really, it's just looking at this vol. We've been working with clients, and basically clients that have been using indexes as a primary source of income, doing strategies like condors, credit spreads, or selling out of the money strangles. We've had them looking at Apple and treating it like trading the index because it had the vol. Unlike where in the S&Ps running at a 14, 15 vol, it's been a struggle to sit there and sell premium where you feel comfortable with the whips. And so, we've been working with clients to understand when you're looking at index vol and having it be so cheap and not seeing the opportunity there for those types of strategies, start looking at some equities, because the equity volatility has been on the move in a lot of big names. And especially as we get into the end of the year, and specifically with Apple, these institutions yesterday showed that there is a point where they're going to have to unwind some of this that they got into 100 points ago, or at least they're going to have to start to support it and buy some more. So that's been the primary conversation that we've been having with Apple.
We've made that comment several times here on this show, and it's mostly been a joking comment, but really only half joking, that Apple in many ways has become an index unto itself now. I mean, where Apple goes, the market tends to follow. NASDAQ certainly does. It's got the liquidity, it's got the vol, it's got everything, institutional participation, everything you want from an index type name. But you're right, it's got a little bit more bang for the buck. If you're out there fighting, scraping for getting some premium in the S&P or something like that, come out to Apple, where there's a lot more room to play, and even premium buyers like Uncle Mike Tosaw are starting to lean towards the dark side of the fence.
Well, yeah,
I thought I was a degenerate premium seller the last show.
It switches, depending on my mood, sir. Andrew's not here to represent the buying half of the equation, so that has to be you now by default.
All right.
Well, Mark, one of the things, though, is that you're seeing a lot of strategists out there. If they were long premium, they're starting to bang out, or those that were short premium are starting to spread it off. In other words, they're taking in an opportunity to stay into something for a little bit longer. An excellent example is doing some diagonals, taking advantage of that spiked front month vol and buying some back month. Now you're rolling, maybe after the vol starts to come out a little bit, you start rolling those from a D to a Jan, and now you go from some sort of diagonalized spread into an actual vertical, while staying with the spirit of the position. We've seen a lot of that, especially in Apple.
Joe, since we have you on the show, let me just take a moment here to pick your brain, because I'm always curious about this. We see this, obviously, to a great degree at Insider. I'm curious how much you see of this at OX too. No matter what the strategy is, no matter what the topic is you're intending to go in to discuss, covered calls, risk management, whatever the case may be, butterflies, it doesn't take long for someone to turn it back to Apple in some way, shape, or form. So I'm curious, as you're out there jotting around the country, doing these various events, educational events, webinars, etc., what percentage of your time, questions, whatever input, would you say is devoted to discussing Apple on a regular basis these days?
I don't focus on it at all. And majority of my conversations right now are more along the lines of the logic chain that I have to getting into these approaches, these strategies. So I'm discussing more of the approach than the underlying, because the approach is going to define. I don't care if it's Apple, I don't care if it's Google, I don't care if it's GE. It's the logic chain of how I get into this strategy that we're discussing. So and the media makes sure that we keep Apple top of mind. But as far as we're concerned, we look at it and go, okay, yeah, it's an underlying. Yeah, we watch it. Yes, it's obviously top of mind because the media just keeps bringing it up constantly, like a fiscal cliff. And so we don't spend that much time focusing on just one name.
Well, you're fortunate then. You don't have your clients derailing you constantly saying, yeah, but how do I apply that to Apple? That's usually the question we get.
Well, yeah, and you want to know why you get that question is because we never put out, where the discussion doesn't revolve around looking at things in terms of probabilities. In other words, that forward-looking concept, we're always doing it statistically, which is always looking in the past. And so, there's a guy on this call that basically kind of said something about analysis and specifically technical analysis. And he goes, it's like driving a car looking through your rearview mirror. And Tosaw, you know what I'm talking about. So, we really try to put a logic chain in front of people that says, you know what? I want you to think about how you get into these strategies with a very clear methodology. And it doesn't matter if it's Apple or GE or a commodity, you're going to be able to now go out and execute and execute the appropriate strategy for that environment.
Well, it goes back to what you and I used to work on years ago, Joe, and that's the when we brought out the OX method, and that's when we did that, risk management was the paramount to it. And I always tell people that in the years that I spent when I was at OX traveling the country, I always kind of compared risk management to the old saying, work with a positive attitude and you can accomplish anything. Well, that's true, but the problem is no one believes it. And when you tell people to do risk management, the problem that I always saw is that not nearly enough people actually did it. And the ones who did had a tendency to be much more successful.
And Joe, yeah, I certainly wouldn't attribute all the hate of technical analysis to Uncle Mike. There's been a fair share of that going around on this show since it launched. I don't think any of us here are really too deeply entrenched fans of technical analysis. It's never been something we've relied, at least not personally myself. And I don't think Uncle Mike, you maybe have a little bit of, and Sebastian, I think you take a dim view of it.
Well,
I'll be the technical guy of the group. Why not? I'm the premium buyer today.
I'll be honest. The interesting thing about technical analysis is that it works until something changes. Does that make sense? So you'll see the 50 and 200-day moving average work. People are like, oh, look, it's bouncing out the 50-day moving average until there's some sort of catalyst, and then you might as well throw any kind of tech out the window. So if we were in a perfectly ceteris paribus world where all other things are equal, I think that you maybe could have some sort of some validity to technical analysis. But I think using technical analysis for and levels for anything beyond a day or 2 days is dangerous. So if we hit up a 50-day moving average and bounce off, but we don't move after we hit it, well, then that average isn't really a 50-day move. I don't think that's a technical barrier anymore. I think that the problem with tech is that it's rear view looking, as Joe said, and it works until it doesn't, and then it really doesn't work. So you just have to understand when there may or may not be a catalyst. Good luck with that, and then you'll be great with technical analysis or whatever else you want to use. Ninth degree Fibonacci's or whatever they're called.
Was that the local brown line coming by in the background while you were finishing up there?
It was the orange line, but yeah.
The orange line, yes. It gives us that local flavor for the show. But yeah, we've discussed this a little bit.
You're gonna miss that when I move to the other office.
Are you moving offices now? You just moved.
we're not 100% sure where we're going to land, but I think we're going to end up not directly next to the L.
It gives, like I said, it gives it that local flavor.
Yeah.
or the talking from 30,000 foot in a 737 flavor too, whichever way you want to interpret it.
Mm-hmm.
I don't think the Yeti has a filter out L setting on there. Unfortunately. But yeah, it's interesting. I think we could go down the rabbit hole of technical analysis here on the show, but we've talked about it a little bit in the past. And some other things we've hit on recently, or I know Uncle Mike's been a big factor for you. You've been going on quite a bit about holiday sales. They're actually looking fairly strong so far post Black Friday. And a lot of people were concerned this year wouldn't exactly be wouldn't give us the boost to the end of the year that people are looking for. But seems like so far holiday sales are holding up. Everyone's going in for their buy one, get ones, and they're trampling each other for their various Black Friday deals. So that seems to be holding up well and true. Have you been watching all your retailers?
Well, what I think that what we're seeing right now is that Americans are like, well, you know what? Even though everything's bad and things may or may not get better, who cares? I'm going to be an American and I'm going to buy a Christmas present. I think that seems to be the attitude of Americans right now. And, you can make a case whether times are going to get better or not in our economy, but I do feel like we're seeing a resilience in the American citizen right now. And that's part of it.
Aren't you just the glowing, optimistic patriot, sir? That's why we like having you on the show. You bring a ray of sunshine and puppy dogs to the show to contrast our deep cynicism.
Tosaw, just get them wind up. Why don't you do that? But I mean, really, when you look at it, though, not to get too fundamental, but it's more than a spirit of patriotism and going out there. I mean, the reality of the fact is that in spite of Sandy and what has transpired on the East Coast, I mean, you still see economic data that is showing an uptick. The stress, or actually I wouldn't even call it stress, but where the consumer names are going to start getting hit is a confusion of, the housing data, and the housing sector in general has been an enormous driver for the consumer side of the market. And it's been a leader. You start to see some profit taking, even with some decent numbers. That's going to put some stress on the sector in general. But tomorrow's numbers are going to be really what help us understand going into year end, with the sales numbers really not going to show any value until January, when we're really going to be able to wrap our minds around it. But the non-farm payrolls and the employment data, with decent claims coming out today, that's the stuff that you're looking at. The crude inventory is very bullish draw, and crude just can't get over 90, but it's still showing that people are out there and that the consumer's strong, but could be challenged going into the new year.
Yes, you mentioned the jobless claims. Of course, they dropped this week as well. Not much of a surprise there. They were relatively inflated post-Sandy, as part of the East Coast was literally underwater and you really couldn't not too many jobs to be had during that period. But now that we're recovering a bit from that storm, those numbers have dropped back into their relatively normal range for what we've seen over the past few months. So that really may have contributed a little bit to the rally today, but it wasn't too much of a surprise. One of the other interesting things I noted today is part of another trend we're seeing. We've been talking fiscal cliff, Washington a lot on the show lately, but one of the side effects we're seeing of all this uncertainty in Washington, and also some of the impending threats coming next year, is that everyone and their mother is moving up their dividends to get them in the 2012 calendar year. Sirius, the latest one today, coming out today, $325 million in a dividend. I thought that was surprising to me. They had that much to give in a dividend. Sirius hasn't exactly been on solid footing much of late, but they're also buying back $2 billion worth of shares. So they have some capital in there somewhere. I think Sirius probably most famous as the company that gave away a substantial portion of their stock to Howard Stern at ridiculously inflated levels back at post-IPO, and they've never really looked back from those levels since. It's been vacillating in the 1 to roughly 3 range for the better part of the past 2 years.
Sirius, the day trader's darling, is really what it is.
Yeah, I mean, if you look at this range, it is it's very, very range bound for 2 years.
Yep.
It's like the old city without all the volume.
Yeah, I think one thing though, for those that are out there either positioned with options in these stocks that are starting to put these special dividends, or those that are trying to position going forward, there's some complexities with this and how they're treated. As a matter of fact, there's just a couple circulars that were going out from the OCC, and we're going to try to get some information out to our clients, but also how, when these come out, you think about it, Costco with the $7 dividend. I mean, those that went in there and bought the $100 puts, they come in post, the X date, and they see that the stock is now trading $7 lower. They're thinking they just made a ton of money on the $100 puts. Guess what? The $100 puts are no longer strike there. $100 puts are now $94 puts, or somewhere around that lane.
Yeah, it's a special div.
Yeah, so there are a lot of considerations. I just want to throw that out there. So if you have questions, get in touch with your broker, because there is some considerations that you're going to have to follow, not only on how they're going to treat the actual deliverable on that, but the strike price adjustments and so forth.
Yeah, well, I think the big thing to be aware of is with all these dividends that are coming up, I think it makes sense to make a play on them if you think they might announce. Once they've made an announcement, there is no more play, so don't try it. You're not smarter than the regular market. You're not getting any free money from the internet, pal. So be smart. If you want to make money trading special dividends, make bets on what might have a special dividend. Don't play stuff that does have a special dividend.
Yeah, once the horse is out of the barn, it's a wee bit too late. That's always a fun email/phone call to have with someone who thinks they just made a fortune, and you have to walk them through the price. Actually, the strike is now here, and those calls or puts or whatever are essentially worthless, or worth about the same that you paid for them, and it's usually a very sad realization on their part.
Yeah, just a rule of thumb, guys, just so you know, basically what the rule is for special dividends, if it's in excess of 10% of the cost of the shares, it will trigger a strike price adjustment. And the last time that I remember this is a few years ago. It really hit the REITs hard. So just, again, I would either go to the OCC website, call the OIC or 88 Options, or just reach out to your broker.
Yeah, definitely check with your broker if you're looking for more information on that, because you don't want to be caught unawares when these things happen, or thinking that you made a fortune when you actually didn't. Neither of those are ideal scenarios. But now we're going to close out the old trading block, and we're going to roll right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and that funky tune means it's time yet again for the Odd Block. And even though Andrew couldn't be here today, I thought it would be nice to dedicate an Odd Block to him by pulling up all of the unusual activity that he highlighted for us today on the old optionsinsider.com. So this will be an Andrew special, even though he's not here. And we're going to kick things off with a pretty sizable put roll here in the Spider. Of course, S&P had an interesting little range today, not too big, close to the upside, and we saw paper coming in, rolling the Dees weeklies, the 138 puts, rolling them out to Jan about 10,000 times here at the time of this writing. Unfortunately, Andrew didn't specify whether it was a buy or a sell. I'm going to go out on a limb and say that's a rolling short position, given everything we've seen of late in the market. So yeah, he's rolling their shorts. Obviously, volume on both of those strikes, pretty sizable. It is the SPY, after all, about 27 and 38,000 open, respectively, on those strikes. And yeah, 30-day implied hovering around 15%. No surprise there, given everything we've been talking about in vol land, and on this strike particularly about 9.2%. So starting off, sizable put roll there in SPY, then moving on over to another index product, EFA. This is, of course, the iShares MSCI Index Fund. This is another one that had a modest range today, but today we saw people coming in and blasting out a pretty sizable put spread here in the good old EFA. EFA, of course, closed at $55, roughly 55.5 today on the day, doing actually a surprisingly low amount of volume than they normally do here on this one. Usually doing about 60,000 contracts, doing about a third of that today on the day. But this put spread this is actually a review of yesterday's activity. So this put spread went up towards the close at the end of the day yesterday. It was the Jan 50-53 put spread going up 8,000 times, being blasted out for about 42 cents yesterday. Coming in on today's open, this trade looking about unched on the day. This person came in and hit about a 16 and a quarter vol on this trade. So a fairly decent level compared to the historical we've seen out in EFA of late. Of course, if you've been tracking this one, this name has been banding about a little bit of late. Got down to about 51.5 in mid-September. This guy is obviously betting that we're going to be hanging around these levels at least through the end of January here. I don't have OI. Open interest is high on these strikes, so it could be closing, but it looks like it probably is not. Moving on here in the old odd block, we're going to dive into, I think Andrew did this one as kind of a joke, but also a bit of a callback to the old show. He wrote up his favorite and a darling here of the odd block and of the option block in general, Zynga. Of course, Zynga, not exactly a high flyer. I think he famously said on a recent show that he's washing his hands of that name after having his heart broken several times, both with his synthetic Facebook and then more recently with his, I believe, his downside put sale there in Zynga. But Zynga, of course, getting a little bit of a bump today, up about 7%, trading around 2.5 again. This is about the levels we saw people coming in last week and looking to load up on risk reversals, bullish risk reversals. Today we saw people coming in just looking to load up on at-the-money calls out in Jan. A lot of the Jan 2.5s going up for a substantial amount. I mean, Zynga's usually been doing about 25,000 contracts a day. They did over 50,000 today. A substantial chunk of that in this 2.5 strike. The Jan 2.5s went up a lot of blocks, 3,100 and 3,800 going up with over 15,000 total on the day today. So a lot of love for these Jan 2.5s. And we talked about this in the past about how these very, very cheap names, these are essentially just, the name almost itself is an option at this point, but still a lot of love. We talked last week, people legging into bullish risk reversals. Now it looks like they're just going straight up for the calls. Sebastian, I know you guys have been a little leery of Zynga of late, but what do you think of all this at the money call love in Zynga?
You know, I thought the vol was too high. I've been short a bunch of puts in December and January. You know, they've got a ton of cash. The vol was high. I kind of like selling like the 2.5 put. I am short the 2.5 put as a way to potentially buy the stock for, you know, $2.25 and or just collect a 10% premium on the stock. So I don't mind it. I really don't. In terms of call buying, I think the vol's too high. I think you're better off doing some sort of put sale or some sort of short collar, not just straight up call buying. The vol's too high. You don't do that.
Hey, you got to love these guys, though. They're bidding up all those juicy puts for you.
Yes, I really do.
So a tip of the hat from Mr. Sebastian to all of you call buyers out there in Zynga, keeping his puts nice and juicy, as he likes to say. Well, that's going to do it for this Andrew special edition of the odd block, and now we're going to close out and roll right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is, of course, the portion of the show where the boys over at OX take the reins, and I get to take a rest, which is my favorite part of the show. But, Joe, since you haven't been on the show in a while, there's a lot of different ways you can run with the old Xpress Block. But what do you have up your alley you think might interest our listeners? What are some of the interesting developments going on in your neck of the woods over at OX?
Well, you know what? There's a few of them. You know, as far as the customer conversations that we've been having over the last couple of weeks, it's quite a bit of it has been, you know, really, what should I be focusing on? Is it a name, as we discussed in the earlier bits? Is it a specific strategy? And the discussions that we've been having with a lot of these clients is really lining up that logic chain, trading smaller, trading more frequently, and utilizing the tools and applications that we here have at OX, whether it's the ideas hub to get those juices flowing and getting those ideas out there, then start looking at the probability analysis and really start laying it out there, because the last couple of days have shown one thing: this market somehow, some way, has a real big backbone in it. Obviously, we can go down the road of discussing about, well, you got the Bernanke put working for you, and that might be forever, the way that they talk. And you have probably one of the largest institutional covered calls, and I'm using that figuratively, but literally, there's a lot of premium selling out there, and the market's just been able to hold up. And when you can see Apple down 45, $50 in a couple days, and see the market basically stay in a very non-committal whippy range, but it was still a range. Clients are now looking at this and going, okay, what do I do? And really right now, when you look at the markets and the way they're set up, the upside is the side that people are starting to look at. It's how do I play it? Because this market has shown a backbone, and we've had a lot of conversations along that. One of the markets, though, that has been a focus of clients and a discussion point with some of our futures guys over there, Kurz and Big Z, when they talk on Espresso, is taking a look at the gold markets. And the gold markets, they dipped below 1,700, and they have held, and it's getting more difficult to hold that bullish stance, but they came off of some serious levels back in late November and hit that high, and it was late October, hit that high in late November and have been coming back, but holding those levels where it broke out. This is where gold bugs have been questioning, what do I do here? And the challenge on the upside and holding that conviction is being tested now, but still, I think that a lot of clients we've been discussing, looking at that market and, sticking with your convictions, at least at this juncture, but they're a little bit tempered at these levels, that 1690, 1689 level. So that's primarily what we've been talking about. We're getting very excited about 2013. We have an enormous rollout that we're going to be doing on education and events side. We're going to be rolling out in 2013 individual events at Schwab branches done by presenters from Options Express. So we're going to be bringing that real live seminar series out to the branch level at Schwab. We're going to be doing we're working very hard on putting together some really well thought out and packaged education offerings going into 2013. So a client's really going to be able to have a nice customizable experience so that they can really optimize the value of these products that we discuss here on this show, the derivative products, but they're going to be able to do it with such a high level of confidence and with the tools and applications that we have available, and have that skills training along with that training so that you really have dug real deep. It's extremely exciting going into 2013 what we're going to offer for our client sets.
I'm happy to hear that you're going to be making the rounds, all you OX educational guys, at the various Schwab offices, because that certainly is a good thing. Schwab obviously has a presence not only in the retail space, but a very strong presence in the advisor space, and that traditionally has been a, shall we say, an audience that has had less than ideal amount of penetration from an options perspective. So the more you can carry that knowledge to their various field offices, they can in turn take that to their clients of all spectrums and all types. That would be, I think, a beneficial thing for a lot of people out there, including a lot of the end users of these advisors who aren't hedging their portfolios with puts and things like that.
Yeah, that's exactly right. I'm working very hard with Alex Jacobson and the RIA and IA group over at Schwab. we really, and I agree with you, that is a huge opportunity for us to get that enthusiasm, that education out to the reps so that they can actually, as Mike does for his clients, we want reps to be able to maximize those opportunities as well. And I can't agree with you more.
Alex on previous shows has hinted about adding futures to the Idea Hub. You're obviously hinting now about a lot of major upgrades coming to the OX educational platform across the board. Can you give us maybe a little tease, a little peek at what might be coming down the road in early 2013?
Yeah, you know what Alex had mentioned, we are working very hard. We have already the plans to implement futures to the Idea Hub. So you are going to see derivative ideas coming out for futures and futures options. And so we're very excited about that. Also, Mark, one of the things is that, we are looked at as innovators. We have always done that. And with the walk limit and the Idea Hub, these innovations for execution, for finding ideas, we're going to continue that. And we've really come to a place where we're going to take what we have, some of the tools and applications, and we believe that innovation is something where you take something that was good and make it great. And so 2013 is going to be spent building out consolidated tools and taking bubbling up that institutional hardware, like what we did with walk limit, and the ability for somebody to have a cancel replace every 2 seconds and have it in a range, and be able to take advantage electronically of that auction that's always available there on multiple exchanges. And we have the hardware and the technology to do it, and retail is able to participate like that. That has traditionally been something that would only be considered something on an institutional level. We're going to continue to bubble all that up so that our Options Express and Schwab clients, our dual clients, are going to be able to go out there, and they're going to be able to participate in the marketplace and have that playing field be as level as it has ever been.
There you go, listeners. A little peek into what's in store for you coming in early 2013. Sounds like a lot of interesting developments and some interesting new tools coming your way. We've always joked on the show that retail has essentially pro-level tools in their hands, and that's really the case going forward here coming up at OX. So I'm excited. I'm sure your listeners are excited. But now we're going to roll right into, speaking of excited, I'm super excited to hear what Uncle Mike has in store for us in the strategy block.
The strategy block.
All right, and welcome to the strategy block. This is, of course, where Uncle Mike comes down from his outhouse in scenic St. Charles, Illinois, and regales us with his wit and wisdom from the world of options. Uncle Mike, my birdies told me today you might be dallying a little bit with the weeklies. Is that correct? Have they earned their feed for the week?
They have, and it's out of the outhouse and into the penthouse for this section, baby.
That's your version of moving on up. That's your version of the Jeffersons. I like it.
That's right. The big deluxe apartment in the sky. I've followed the weeklies pretty closely ever since they came out a few years back, and I've never really done a lot with them. If implied volatility has been fairly high, occasionally I would sell one against like a diagonal spread or something along those lines. But I've really done very little with them because of the fact, well, two reasons. Reason number one, like Mark likes to talk about on the show, is Thursday morning when the new weeklies come out, it's just a mad dash to the weekly sell-off for the next week.
Hit that bid, baby.
Yeah. And the other reason is that I'm not a fan of getting my butt kicked by gamma. If I'm going to get my butt kicked, there's plenty of other wonderful ways to do it. And I'd prefer not to get it done by gamma because I don't like selling something for $1 and then have the market move a little bit and all of a sudden have it be worth $12. So with that in mind, the weeklies really haven't been a very good fit for me through the last couple of years. But we've been calling for this on the show since we started the show for that matter, having multiple weeklies so that you have a week 1 option, a week 2 option, a week 3 option, and so on down the line. And I'm delving into these a little bit now. I talked about the covered call that I had on QQQ, I believe it was last week on the show. I did a 2-week covered call at the 66 level. And so right now the Qs are at 65.32, and it's very likely tomorrow I will get out of that call for a penny or something along those lines and move on to something else. I'll make that decision. That's a game day decision I'll make tomorrow. But what I like about this now is that you have a bailout plan. So in other words, if you get gammaed, that's going to be the verb for the day, gammaed, on a weekly before you had these multiple week ones. What are you going to roll to? You're going to roll to something that has 4 times the time value in it, or 4 times the time frame of it that you originally were in with a weekly, or you're just going to get out with getting your butt kicked. Now, the fact that you can roll, let's say you have a 2-week option that you're in and it's starting to go against you a little bit and maybe you need to roll it, or it's going your way a little bit and you want to roll it. You have the ability to roll to a 3-week option. You have more things in mind. So I just want to tell the exchanges, thank you for these products coming. I think they're great. And I think this is going to be a big part of everything that I do because of the fact that I'm able to have a bailout plan now, and you don't have the mad sell-off, so to speak, on Thursday morning. So with that, what I'd encourage everyone to do with any trade, always have a plan for in case you're wrong, because you will be, and we always talk about that. But now with the weeklies, you have something to combat the gamma risk if you're selling weekly options. And that is one to grow on.
There you go, listeners. A love letter from Uncle Mike Tosaw to the exchanges. Thank you for an escape plan, if you will, for when the gamma bites back. So, all right, Uncle Mike, thank you for that. And now we're going to close out the old strategy block and dive right into Around the Block.
Around the Block.
All right, and those car horns are always a sad sound for us listeners because it means we're cutting to the end of our show. But before we wrap it up, we have one more segment, of course, Around the Block, where we talk about what's coming up, what's on our radar, and I think not too hard to guess what we're fixating on for the rest of the week and pretty much the rest of the month. And that is, of course, as we alluded to at the top of the show, fiscal cliff, fiscal cliff, fiscal cliff. Everyone and their mother talking about that. Joe, you also hit on the non-farms tomorrow. That will be an interesting indicator because that, of course, will show us exactly how we're faring through this portion of the season. And, of course, you have to wait till next year, you're right, to really get the impact of what we did here now. But at the very least, it'll give us something of an indicator of how things are performing. But Joe, since this is your first time on the show in a while, I'll let you go first. What else? Non-farms, obviously a big thing to watch. What else is catching your eye for the rest of the week and pretty much the rest of the year here?
Yeah, so we're going to watch the jobs data, and continue to see how that impacts the market. Overnight, I'm going to be watching Germany's industrial production report. I want to see how the futures react. That's going to give me a good pulse of what the opening is going to look like tomorrow. Here's the thing, Mark, as far as the fiscal cliff is concerned, you've seen the action in the equities, and I think traders are basically making a statement that these politicians, they'll come to some sort of impact, get through some sort of agreement. It won't be the complete package, but they will do it by the 31st. So I think that while it will be headlines that will be out there and will add emotion, we're going to be looking at that consolidation range of around 1498 to 1415 on the SPOs. And those are the levels that I'm going to watch. If we're going to test up, going to break through that on the 15 level and 98 level, basically 1400 level. And the last is the headlines are going to continue from the EU. The bottom line is the latest headlines, this morning about Greece. It's basically the party's over. It's going to happen. That default is not something that's a potential that they're going to be able to starve off. The market's still held up. So, Mark, I'm telling you right now, we're going to look at the challenges on the side. If we do, I think you're going to see the strength swiftly switch over to the bid.
It's interesting. This situation with the fiscal cliff is somewhat analogous to what we saw last year with the looming debt ceiling debate. Of course, last year, obviously, vol was higher, and everyone and their mother was piling in for vol to sell off dramatically after that same kind of conclusion you were mentioning. Everyone assumed they would get to some conclusion at some point, and the vol would come off precipitously, of course. Yeah, go ahead.
And vol's been coming off the whole time. The whole time this is coming down, vol has been coming off. Yesterday, at the worst levels early in the session, vol was coming off. So, the traders are looking at this and going, we got a pretty good feel that some component of this is going to get done.
Yeah, of course, last year we had, of course, right after that, the downgrade, which bit all those guys in the old rear end. So maybe some people are a little bit more hesitant this year, but still somewhat analogous in that sense. Mr. Sebastian, what has been catching your eye aside from the passing orange line?
Well, if you're looking to hedge, VIX December contract, the future is actually cheaper than the cash right now. So an interesting trade might be something like the 16.20 or the 16.22 call spread in December. I think a lot of people are expecting the vol to come off if there's a deal. One thing to look out for is if there's a deal and vol doesn't come off, get out of the market. That was our big warning sign.
Get the hell out of Dodge.
That was our big warning sign last year. We had a deal, right? It passed Congress. The VIX didn't move. VIX futures didn't move. 3 days later, the market blows up. You had 2 days to get out. Learn from the past. And so I do agree with Joe. I think they're going to get a deal done. I do think that leads to a higher market, depending. But if you're looking to hedge, I think that the way things are structured right now, non-farms, the market is bracing for non-farms a lot more than people realize. That's why we've got the future below cash. And so, keep an eye on the December future. That's between now and a week from next Wednesday. So call it, a good 10 trading days. You can get a trade with some nice edge in it that's bullish vol. So that'd be the direction I'd be heading.
And last but certainly not least, Uncle Mike, what is catching your eye for the rest of the week? Obviously, Apple on your horizon. Perhaps some gold as well?
Well, yeah, I think not so much the gold. I think that what a lot is, like what Joe's saying, I do think they're going to get a deal done in one way, shape, or form. I think the deal is going to be along the lines of what politicians typically always do, and that's prevent the inevitable and say they'll get some type of extension to where they'll get some type of a temporary fix, and it won't be what either side really wants, but it's just enough to move forward and keep everybody happy, and all the politicians do their best to get reelected. I think that's what's going to happen with it. In terms of the market reaction, what I think would be interesting is that I don't think they're going to have a deal for another few weeks, and I think most people would agree with that. I'd be curious to see what would happen if for some reason a deal was struck tomorrow, let's say. And if that were the case, then how would the market react? Would the market sell off on such news because of the fact that the deal was made so early? I'm not sure on that. But the way with which I'm looking at this is that I think it's going to be kind of a ho-hum market until the end of the month. And what will be interesting is the last week of December, which is usually a dead week. If that's when the deal talk starts happening, or when if they're putting it off till the last minute, like I think they will, are we going to have an active market on a traditionally low volume week, the last week of December? And just the one other thing that I want to give a shout out to, my NIU Huskies. Excited about them getting a berth in the Orange Bowl. They're taking on the college football bullies, and they're beating the system. Go Huskies.
Beating the system. All right, on that cheery note, that's going to do it for the Around the Block segment, and that's also going to do it for this episode of the Option Block. But before we sign off, I always like to check in with my cohorts here on the All-Star panel to see what's going on with them that may interest you, the listener, and we'll mix it up right now, and we'll start off with you, Mr. Sebastian. What's coming up in the land of the pit?
Nothing super special. Read my blog. I'm going to be on Bloomberg tomorrow, but I don't think this will be out. I'll be on Fox on the 13th, and I believe the 19th. So, and I'll probably be on Bloomberg a couple times next week. So keep an eye out.
Hey, keep an eye out for Andrew's unusual activity, too. Obviously, we feature a lot of unusual activity on the Options Insider every day. We've added Andrew to that stable of contributors for that. So if you like Andrew's analysis, then by all means, check it out on theoptionsinsider.com. And Mr. Joe, what is coming up in the land of OX in the near term, obviously aside from the grand expansion coming in 2013?
Yeah, we actually have an event this weekend. And Jim Ruzan is actually going to be doing a workshop this weekend. So you can go to the Options Express website and sign up for that. And I would definitely take a look. We're going to tighten up the event schedule. Also, going into expiration, we're going to be doing a bunch of new webinars. I'm going to be doing some expiration webinars and also talking in great detail about this logic chain as far as how we approach trading and throwing a methodology out there. We're going to be doing that. I'm going to actually be teaching a lot of those classes over the next week or so. So again, you can go to the site and you can check out all of that coming up. But if you're in the Miami or Boca Raton area this weekend, please swing by. We're going to be in that area. If you want, you can just email us at education@optionsexpress and we can get you all the information.
Funny how this time of year, all those events suddenly seem to start popping up in sunny Florida and Arizona and all these other areas of the country.
It's incredible, man.
Amazing how the probabilities, it's amazing how that works out. You know, your poor clients in Minnesota, they're kind of out of luck for a few months.
Yeah, back when I worked at OX, they had plenty of coverage in Minnesota around December and January, from what I remember.
It was actually end of January, beginning of February, and believe it or not, that was the month, that period of time, it had the highest level of engagement. We've done them in the spring there. We've done them in the fall. But that time of year, because everybody's captive and they got nothing else going on.
Yeah, they're so starved because no one's coming their way. Everyone's going to Boca. So if you go up there, you're striking gold.
That's right, buddy.
There we go. Letting out a little bit of the behind-the-scenes secrets over there at OX. And Uncle Mike, what's coming up on the old webinar train, sir?
Well, aside from the fact that I did show with OX metrics how the 16th largest market was Hawaii at one point in time. They never did an event there back in my stint at Options Express, but that's another story.
That's happening in January, by the way.
Okay, got it.
They're mocking you.
They are, but that's all right. They're great people. But at Know Your Options, we have a webinar coming up on the night of the 13th. It's going to be entitled Fiscal Cliff, and we believe that this is going to be the best webinar in the history of Know Your Options. We're putting a lot into it, and we're excited about it. So I'll have more info on it on the Monday show.
All right, listeners, stay tuned for that. And, of course, if you're interested in learning more about any of the topics we discussed on the show today, then surf on over to theoptionsinsider.com. You can get all of the unusual activity, education, analysis, as well as the breaking news from the options market. And, of course, all of your episodes of your favorite program, the Option Block, as well as all of the other programs on the ever-expanding Options Insider Radio Network. And of course, on behalf of all of us here on the old All-Star panel, we all want to thank you guys out there in the listening audience for downloading and streaming and subscribing to the show, and of course writing in. We didn't have a chance to get to your questions and comments on today's show, but we'll get to them on an upcoming show. And of course, we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.